The Federal Reserve had some shocking admissions in 2012 about their program. Everything is truly coming to light now at this time. It fully documents what we have thought and has given us the answers we need. The Fed is entirely responsible for the destruction of the US dollar, and there is no stopping it. You came here for the truth, so let me unveil that for you. Today, we are going to look at what the Federal Reserve has talked about. Let's begin. Back in 2012, they had this meeting of the FOMC, and you will see here, Federal Reserve Chairman at the time, Ben Bernanke, everyone's favorite, the lovely Janet Yellen, and now Jerome Powell. This information is directly from the Federal Reserve's website. You can see it for yourself. I will cover the most important points. Stay with me right away. What did Powell say? Well, why stop at $4 trillion? The market in most cases will cheer us for doing more. It will never be enough for the market. Our models will tell us that we are helping the economy, and I will probably always feel that those benefits are overestimated. And we will be able to tell ourselves that market function is not impaired and that inflation expectations are under control. What is to stop us other than much faster economic growth, which is probably not in our power to produce? My, how things change. You saw Alan Greenspan, a big proponent of gold, of Austrian economics. Then he gets voted in as the Federal Reserve Chairman, and you saw what happened there. Things really do change. Now this is huge. There's a lot to cover here. I'll do it as quick as possible. The problem they have is exiting from a near $4 trillion balance sheet. Remember, this is back in 2012. We've got a set of principles from June 2011 and have done some work since then, but it just seems to me that we seem to be way too confident that an exit can be managed smoothly. Markets can be much more dynamic than we appear to think. Right away, it's talking about the fact that they've got a massive balance sheet and they have no way to scale that back. And it's so true. They know that. That's why they're sitting on $4.5 trillion, knowing that they can't put this back into the market. So he talks further about this here. Take selling. We are talking about selling all of these mortgage-backed securities. Right now, we are buying the market effectively. And private capital will begin to leave that activity and find something else to do. So when it is time for us to sell or even to stop buying, the response could be quite strong. There is every reason to expect a strong response. It talks about how much per month and so on. Another way to look at this, though, is that it's not so much the sale, the duration. It's also the unloading of our short volatility position. That's huge. This is such a big deal. I've been covering this now for quite some time, showing you the VIX. The fact that they have come out and talked about the fact they're shorting it. They are the ones pushing it down. They are the ones who are completely responsible for everything that has been going on in these markets. The Federal Reserve is entirely complicit in what you are seeing today. They have been shorting volatility, and you have seen it breaking record lows every day. To me, this is huge. It talks about everything that I have been mentioning here on this channel, and it simply underlines, highlights, bold, italic to everything I have been saying, and the same that many of you out there have agreed with me on. There's more. We're not done yet. Okay? Last page. I think we're actually, remember this is back in 2012. I think we're actually at the point of encouraging risk taking, and that should give us pause. Investors really do understand now that we will be there to prevent serious losses. It is not that it is easy for them to make money, but that they will have every incentive to take more risk, and they are doing so. And look at what's happened since then. Look at what's happened since 2012. There's so much risk taking out there, but there's no reason to believe that there's anything wrong with that. The Federal Reserve is going to bail everybody out, so why not? Why let all the big guys make money? I'm a little guy. I can get in. I can make more money. That's exactly what's happening. Meanwhile, we look like we are blowing a fixed income duration bubble right across the credit spectrum that will result in big losses when rates come up down the road. You can almost say that that is our strategy. Now this is huge. Again, another massive admission from the Federal Reserve. We always get these little tidbits and pieces that come out in the news, a couple lines here and there, talking about the market, talking about the jobs. Not much gets revealed. Will they increase interest rates? Yes or no. Will they print? Yes or no. That's pretty much what we wait for. That's forward guidance. But it isn't so often that we get one of these transcripts and it's so bombshell. It's so incredible. Particularly because of what this does for individuals like you and I. This is big. I had to make a video about it. I hope that you found it to be as important as I did. We know what the Federal Reserve is doing. And there's even high-level people in the Fed that are talking about the dangers of what they're doing. Trillions of fake printed dollars are there in the market. They can't get rid of them. That's just one central bank. What about the Bank of England? What about the ECB? What about the Bank of Japan? What about all the other central banks around the world that are printing greater than $200 billion every single month? And they know there can be no unwinding. The Federal Reserve themselves are afraid. They've talked about that, and that was in 2012. You would think at this point, they're thinking, okay, let's not get too crazy here. Let's stop, and let's just assess the situation. Well, that was 2012. We are now in 2018. What are you going to do? You're just going to leave it like this? Well, you can see what they said here. We're blowing a fixed income duration bubble right across the credit spectrum. It's going to result in big losses when rates come up down the road. Interest rates, at some point, my opinion, on purpose, they're going to rise. When they rise, the whole market is going to be destroyed. And I say that not as some sort of fear-mongering or anything else, that this silliness that I've heard many times. This is a warning. This is for people to realize, okay, I need to watch how I position myself. I need to take a look at this and not just blindly throw my life savings into something thinking, hey, you got all of these banks out there, you got all of these big investors out there. I'll wait for them to start telling the whole world, okay, we're going to sell now. You all can do the same, and then I'll sell. It doesn't work like that. It really doesn't. So remember this. You won't get any advance warning. It's not going to happen. The big boys aren't going to tell you when we can be able to sell all those stocks, take all our profit, and live happily ever after. It's never worked like that before. It's not going to work like that now. Quite frankly, you need to be ready today, whatever that means to you. So that's all for this video. If you found it informative, please give me a thumbs up. If you like Janet Yellen, give me a thumbs down. If you hate Janet Yellen, give me a thumbs down. I'll stop there. If you found this video informative, I know you'll find my books, The Money GPS, and my new release, Global Economic Collapse, even more informative. Take a look at these books at Amazon. The first book is about the 4 asset classes and how to profit from it. I talk a lot about the Federal Reserve, their activities in this book. It is very much a book of documentation. I get into the history, talking about all the crashes, how they're making the same mistakes. I have tons of different diagrams that are sort of cartoonish that make it extremely easy. The newer book is about similar concepts, except I get into different topics, whereas, becoming self-sufficient and reducing your monthly expenses. And so they complement each other in that way. So you can check them out. Links are in the description below. Take care.